everyone. Thanks for tuning in today. We have a very special guest, Bill Gross, and he is the host of the Probate Weekly Podcast. Bill has a lot of information for us today. Welcome, Bill. Thank you for being here with us today.
Thanks so much for having me, Christine. It's always a pleasure to talk to you.
Thanks you. You too. So I think our listeners will have a lot of interest in the topics that you really deeply understand. And I kind of want to start with, why did you start to get into, contacting reverse mortgage professionals about probate, and what led you on that journey?
It's one of those things where it's kind of like a wave comes in the beach, and how do you stop it? I'm a real estate broker in Los Angeles, California, and I have a team of agents across the country focused on probate real estate. And I have a podcast, Probate Weekly. And increasingly, probates look like a phone call that says, hey, mom and dad passed. We didn't know they had a reverse mortgage, or we didn't know they had a mortgage. And we discovered they have a reverse mortgage, and it's been 7 months, and now we're getting notices of foreclosure. What do we do? We're going to lose the property. There's tremendous equity in there, and we need to protect it. I call that a reverse mortgage SOS call. And increasingly, I get those calls, or attorneys get those calls, or realtors get those calls and call me. And to my mind, it's really just a lack of preparation that allows that to happen. And I think a missed opportunity, and Christine, I talked about it, I think there's two sides to it. I get it. There's hard work involved. And I also, when I look at that industry, I used to be an originator. I've actually originated some reverse mortgages years ago. I believe that product, as a realtor, we should be doing 10 times more than we are, but for two things: lack of education and the bad reputation on the servicing side. And so I said, well, I think I could help solve that problem by trying to get originators to help address the servicing by educating their customers. And so I launched the podcast, the Reverse Mortgage Podcast, as well, to do that and reach out. That's how I met you, is reaching out on that way. But also my Probate Weekly format, same thing. We have this problem all the time where reverse mortgages, at the end, the handoff is not done elegantly, and as a result, creates opportunities for professionals to step in.
Yeah, that is something I see as well, and I'm glad that you're bringing awareness to this. What do you believe the solution is?
So I think, in the news, I think I missed you. We both have seen Flash, Rocket Mortgage buying Mr. Cooper Servicing. And their perspective is a big platform online. Of course, they want it to be a call center kind of behind, some anonymous website. But what they recognize is that the deeper your relationship with your customer, the longer that it is, the more opportunity for value creation is. Originators, I think, are missing that opportunity in that they do a loan, and there's, well, these people are old. They're not likely to refinance a reverse. So that can happen. They're not likely to move, or as likely. And so they're less likely to keep in touch with clients than a forward mortgage originator. And I think that's a big mistake, in that those clients have family that are referrals for mortgages. Those clients have attorneys, wealth advisors, the kind of people we want to meet. We say, well, how do we meet them? And the answer is, they're in the Rolodex of our clients. If we did a better job with our clients, we would have more access to that. And so I noticed that when as a real estate broker, when I talk to mortgage originators, the ones that have built businesses over the long term, have built successful businesses and sustained them, had the deepest relationships with their clients. And so I'm really kind of challenging originators to keep those relationships, stay in touch, and hopefully get a chance to meet the children before mom and dad pass, to make those handoffs more elegant.
I think that's huge. And to your point, some of the best relationships I have are with the adult children. Often I get a certain amount of clients that are looking for something for mom and dad.
Yeah.
And so relationship is right off the bat. On the other side, sometimes people go, oh, it's none of the kids' business. And I think that personally, I think that's a disservice to the whole family. And exactly what you're seeing. Oh, we didn't even know they had one. And then why did they get one? Well, they don't know. They don't have the opportunity to have those conversations and see that the reverse was a really helpful, amazing decision in most cases. And all they see is the mortgage must be paid off, and it's a little confusing. And so what are some of the oh, sorry, you have a comment on that? Go ahead.
Well, I was going to say, I think the money we get paid is a reflection of the value we create for other people. So if a customer doesn't want to share with their kids, which is their prerogative, but they still have an attorney, a wealth planner, an accountant, especially now with reverse mortgages with required annual update, why not make sure we're involved with that process? Why not make sure we know that, like for example, California, it should be titled in a trust or some sort of a estate plan rather than their names. If not, at least ask the question: have you considered getting a family trust? Have you considered an estate plan? I know an attorney that can help you. And I just think that it's not necessarily we're going to get to the kids, but what we are going to do is by having a relationship, we're going to have a chance to have deeper connections to those people and the people they know. And we all like getting business from people who refer to us rather than just strangers. So to me, the deeper we can go, yeah, some people don't want to introduce you with the kids, but they maybe introduce you to their attorney or their accountant. And that's also a very valuable reward for the work that we're doing.
Okay, you touched on something that I fully believe in. Can you share with our audience why you believe that homes should be in a trust?
Well, I'm in California, and so not from a legal point of view, but business advice, I would say anybody owns a house over a couple $100,000. Now, the law changed on small probates, and that's still kind of up in the air. What does that mean? What does it not mean? So let's just set that aside for a second. Every home should be in a trust to avoid probate. I think that if you have kids, you should have an estate plan, most commonly including a trust. Why should you have that? Because if you don't have a plan for your assets when you pass or when you're incapacitated, when you're sick and can't make decisions, the state of California has a plan for you. You may not like the plan California has. California has a plan that looks like the DMV. So if you don't mind that, yeah, let California decide, but most people don't want that. And so what happens is having a plan gives you a lot more flexibility to transfer without court approval, to transfer quickly assets privately. You may or may not want to disclose to children if you have loans. You may or may not want to, in advance, tell them what you're going to do with your assets. The estate plan gives you a lot more options. And I think that as real estate professionals, as loan originators, being professional, our job is to create value for our customers. And sometimes we get paid for that, sometimes we don't. But asking the question, there'll be times that customers will say, well, do you know somebody you can refer me to? And our job then is to know those people. And over time, it's not true that every referral is like a seed. We're going to grow a tree and get apples back. But it does mean that if we're helping our customers and we're helping other attorneys, over time, we will get referrals back as well because we're creating that flow of business. And so it's really important, I think, to focus on the customer and make sure they're met. And if we do that, the way law works as a business, you'll get business back.
You touched on something that I think is so important. And my audience is split, half consumers, half loan officers, actually learning more about
Oh,
the reverse. And I
oh,
think one of the things I say to loan officers is the reverse mortgage business allows you to bulletproof your business. And it's for exactly what you just talked about. You nurture, you care, you create relationships,
right,
you are there to answer questions,
right,
and that creates a bulletproof business. People
right,
may not move forward with the reverse right away, but
right,
often once they understand it's a good option, then they're going to move forward at some point. It's often a life event. Unfortunately, I wish we could get more people just to say, I'm going to retirement. I'm going to have life events. Let me set myself up for success. And some people do. We're getting more and more people that way. But we still have the trailers who wait for the life event. And then, oh my gosh, now we got to get the reverse. Hopefully, that life event hasn't affected their finances. And in that case, we can still do the reverse. When it affects their finances, it gets a little dicey.
right.
But can you, oh, go ahead.
No, 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 just agree with you.
Okay. Can you tell us a little bit about what the probate process actually looks like for a family?
Hmm. Yeah, so it's varies by state, different state laws, and then each county has its own procedures within that. It has its own flavor. So I happen to be in LA County, which is the largest probate court in America because we consolidated 95% of the cases into one courthouse, and there's 9 different rooms. So probate is basically if somebody passes, and whether or not you have a will in California, now this is the biggest misconception. A will doesn't avoid probate. A will is probated, and the court will either authenticate the will and go by it, or refer to it, or invalidate it. The court will look at the will as a piece of evidence as to what to do with your assets. If you don't have a will, there's a set of rules on how things get distributed, first to the spouse, and then if not, there's no spouse, then to the kids, and so on. And so it's a set of rules, procedures that's very public, that takes time. It requires court filings, court appearances, and court procedures. And most commonly, an attorney or a legal service, it costs thousands of dollars. The fees themselves from the court can be thousands of dollars of publication. So it's kind of like a lawsuit against your own assets after you've died to determine who gets what, rather than an estate plan. before you pass is saying, when I pass, this person's in charge. If they're not available, this person is. If they're not available, this person is. And here's what they're going to do with it. They're going to give it to these people, these institutions, these charities, take care of my dog, and so on. So you can have a chance to determine that ahead of time, or you can let your state make that decision for you, and that usually doesn't work out as well.
Well, what you said was interesting. So a common objection as to why people don't do a trust or their estate plan is the money. But what you just alluded to is the money's going to be spent anyways.
Yes.
And who foots the bill for that in probate?
So it comes out of the estate, which means the beneficiaries do. And so I think that as I'm saying this, and my parents are passed, my wife's parents are passed. So I'm not saying this to my kids because I think we've taken care of this. But I do think that children should say to their parents, adult children to their elderly parents, hey, do you have a plan? And if you don't, we need to get one. And if you don't think you need one, I'm going to need one, because when you pass, somebody's going to be in charge of your stuff. If not me, my brother, my sister, whoever, get with them and get a plan for your financial assets, for decisions on what you want to do as far as medical, what you want post, after you pass. You want to be cremated, you want to be buried, where, how, all those are decisions that you have the chance to make. But I, as your, potential administrator, like in my case, I was the oldest son, I can ask the question, say, hey, Mom, if you're not comfortable with me, okay, make Steve in charge, or my brother or my sister. I don't care who's in charge, but get somebody in charge and get started on this. It will save us all money. It will save us all heartache, and we'll also end up with a solution that you want rather than the ones that we want. And I think that if adult children can push that conversation, there are very inexpensive online wills, which work in many states, not California, and online estate plans, inexpensive, $1,000, $1,500. They're going to save you $10, $20, $30, $50,000 of legal fees and filing fees down the road, not to mention to make the process simpler. Now, where reverse mortgage comes into play is, well, how do we pay for this? How do you pay for the funeral? How do you pay for the medical costs? How do we pay for moving you from the house to the adult facility? And so by asking these questions, we start to think ahead, well, what resources do we need? Well, we have $2 million of equity, but we have no cash. Well, with a reverse mortgage, we can have a line of credit and be able to access the money, if and when we need to, put some aside so that we can access it. A reverse mortgage, you can't access it when the borrower is passed, but you can have some money accessed ahead of time, put into a proper account so the money's available for whatever needs might be.
That's a really, really good point, because in a probate, the money's tied up, right? Even though they might have tons of equity or assets, the heirs can't use those assets to pay these fees. Is that right?
You can't do anything technically until you have authority from the court, because otherwise, who are you? Just because you say you're the only child, well, prove it. How do you prove it? You go to court. So most commonly, you have to file a petition. It's usually 35, 40 days, and then the court will approve you. And theoretically, during that time, you wouldn't have the authority to lock the house or to take things or to secure things. I mean, on one hand, a responsible person does that and takes the risk. I think it's smart to lock the house. I think it's smart to hide the valuables and chronicle them. But you run the risk of somebody suing you, saying, hey, you're not, I'm the other child. I'm entitled to all that. And you hid it from me, and you took the gold dad had or the money dad had stashed in the house. So that's why it's very important that these things, this is where litigation comes in. Whenever there's money, somebody's going to litigate. And I think the best way to prevent that from happening is plan ahead, and a proper estate plan helps you as best as possible avoid that.
I think that's so important too. And I don't know if you know a lot of people like this, but I know a ton of families where the parents passed and the siblings fought so badly through the probate process that the whole family is just dispersed. They no longer talk to each other. And one of the parents' biggest wishes often is, when we're gone, I hope you guys are close. I hope you're there for each other.
Yeah.
But they actually create the situation that causes them to not be there for each other because they didn't take the time to prepare and plan.
The way I look at it is, leaving money to a dysfunctional family is like leaving a gun and ammunition in the middle of a gang fight. They're going to grab the money and use it one way or another and kill as many people as they can. That's just what happens. And I've seen it. I've seen cases that were in court for like 10 years, and then the $2 million ran out and the whole thing falls apart and they all hate each other and they never talk to each other again. So it's a very common thing. And I think, again, if you're in the space, Yeah, you can just write a loan and move on, or I think you can help set people up on a path. And that requires a little extra work, a couple extra questions. Hey, I notice you're taking title in your name. I notice that you're not, in a trust. There's a reason why. Have you explored the opportunities there? Is maybe you don't want to pay the money, but a family member would because they're going to inherit everything. It's their investment. Or get a line of credit. You can use a line of credit to pay for some of these things as well for a proper estate plan. So definitely, and I think attorneys, on this phone call, you say you have consumers, but some of those consumers or attorneys should be thinking about offering the reverse mortgage as a tool to help pay for their estate plan and the other things they might need. Maybe you want to buy, funeral plots ahead of time. Maybe you want to put some money aside for emergencies after you've passed. So these are things that if you plan ahead a little bit, you can save a lot of problems.
I also want to touch on the grief aspect. We don't, as a society, we don't talk about grief a lot, but having been through
Mm,
grief myself, I was
mm,
shocked at the amount of brain fog and how quickly time passed when I didn't feel the time passing.
right,
And suddenly it was months and months, and I felt like I had just put my head down to rest for a week. And so having an estate plan will also help people because the reverse mortgage must be closed out. You've got 6 months to either sell or refinance or pay it off with cash. Then you may have 2, 3 month extensions, but those are not guaranteed. And
right,
often families are in grief. The mortgage
right.
isn't the first thing they're thinking about.
No,
And then they got to go to probate. And then the mortgage, if you don't pay these things off, you get escalated mail. That's how the mortgage works. It's written
right.
into the FHA guidelines. So having everything in a trust helps smooth that process out for families. Now, how, if we're, for the consumer watching, somebody thinking, I don't have anything left but my house, what are some of the numbers that, there's a threshold where I've heard it doesn't really make sense to spend money on a whole estate plan? I personally am like, well, I think it makes sense for everybody just so that you don't have to go through the probate process. But in your head, where are some of those thresholds?
I think if you own a house, uh, when I say that in California, the minimum house by $500,000, maybe $400,000, uh, you should have an estate plan because the it's so inexpensive. I know attorneys poo-poo the online ones, but I get every attorney to admit this, that if you have one of the cheapest online ones, you're better off than nothing 90% of the time. Now, if you have more assets and you want to get a more proper estate plan, a more complete estate plan, a professional plan, one that's going to cost 3 to 5,000 or 10,000 if it's more complicated, that's great if you have those assets. And if you have mixed families and you have a business and you have multiple properties, yeah, you should have a proper plan for you. But there's no excuse anymore. You can get an online estate plan for, I've seen $700, $1,000. There's a couple resources that I have a Google document on that you can try. And they all, you get what you pay for. But at least you have something. And so to answer your question, I would say everybody in California, now in other states, a will is sufficient and there's free online wills. There's no reason not to get an online will that's free. And there's services you can store it for free. So what happens is there are different companies that offer this to get customers who are going to step up or trade up. Will take advantage of the free service. There's no reason not to have an estate plan. It's anybody who owns a house should have one, or anybody who expects to inherit from their parents might say, "Hey, mom, dad, look, you need one. If you want to pay for it, I'll pay for it. 'Cause I'm the one who's going to get the house. I'm not rushing you, and I'm not telling you you have to give it to me. But if you're going to give me any of it, let me at least put the plan in place so that I can, protect everybody who's involved in this." To me, it just seems like it's so inexpensive now with online services that anybody should have one in my book.
Absolutely. And you touched on something that I have found so important is that I've come across different cultures in my work, and certain cultures have like oh my gosh, we don't talk about death. Well, don't even mention death. We don't talk
Right.
about death. And that to me is a disservice because what's the number one guarantee? Well, the two guaranteed things in your life is going to be taxes and death. That is for sure going to happen at some point. Hopefully, it's far down the road.
Right.
But because it's guaranteed, to not plan for it, I think is just such a disservice to the generation below them or their spouse or whoever's going to have to close out all of their processes. I think not having a plan in place is a little bit egregious in my opinion.
Well, maybe irresponsible. I would go as far as
Yeah.
irresponsible. Egregious is a big. I don't disagree with you. I'm just saying that's not my. I wouldn't put the word up, but I would say irresponsible. And I also say again that we have to have the adult children also, I think, trained. They should feel comfortable asking these questions. That it's not just that the parents, because to be honest, I'm pretty active. I'm 66. My wife's a little older. Unfortunately, my wife had some health issues, and she's recovering from cancer, which is, thank God she's alive. But she's on drugs that really limit some of the things she can do. And if we were both like that, it'd be hard to have proper plans. It'd be hard to put these things together. And so there's a part to where I think that adult children need to step in a little more and feel free emotionally for sure. And they're all busy, with kids and such. But still, this is important. Maybe step up and say, "Hey, mom, dad, if you have time to plan, let's get a professional to help us with this. But let's do this so that when the time comes, it's done dignified, it's done the right way, it's done to your wishes, it's done." And the other part is this: it saves them the trouble, the adult children, the trouble of being the administrator of a probate. That's a lot more work than being the administrator of a trust.
I was actually the administrator of a probate for myself at a very young age. It
Oh,
was so much. I needed a lot of help during that time period. So I feel very strongly that you definitely do want to plan for this stuff and put it into a trust and have the estate plan. I personally think you should have a guide. The online stuff I've seen done so backwards because the people doing the online stuff, they're not attorneys. So one thing I like with working with a guide and a professional is they're going to ask you what you want, and then they're going to turn that into legalese. When you're doing it online, I don't know. I just think the more guidance you have, especially as you're aging, you want somebody to hold your hand through that stuff. And then impress upon you actually have to put the home in the trust.
yes.
And
So
a guide will
that's
help make
where,
sure stuff like that happens.
yes, and I think you're right. Now, some guides do, some guides don't, and I think that's why the people I refer to, I really have two criteria for an attorney I'm going to refer estate plans to. One is, do they follow up on the customer funding the trust, which is, do they actually help? Do they write the deed into the trust and then make sure it gets recorded? Second, do they store copy, help the customer store copy and store copy themselves, because inevitably the parents are going to lose the trust. And some attorneys say, no, I don't keep a copy. I don't want to keep a copy. Others do. I think that a good business person would keep as a service to their customer. And so those are two things I look at. To go back to the funding of the trust, this is where reverse mortgages is the time to have this discussion. Because, why, you ask? Because if you don't have an estate plan, if you can do it while you're doing your mortgage and take title in the trust, let's say, or whether the estate plan ends up being most commonly a trust, then you record your refinance in the trust. You now have a recorded deed versus if you just tell people out after the fact, yeah, the deed's done and that's good. But better to have recorded deed. That way you limit possibilities of problems. You reduce the possibility of problems down the road. And I guess kind of technical. I don't know how far you want to go on that, but I just tell people, if you're doing reverse mortgage, ask the question. If they don't have a plan, it's a great time to get one. And they can, if they're getting a line of credit, they can pay for it from the proceeds. They can get a more appropriate plan paid for rather than not doing because of the cost.
I think that's great too. Plus, you can skip 2 recording fees, right? And my
Yes.
ideal would be get the trust done. We do the reverse mortgage through the recording of the reverse mortgage. We
Yes.
put the home in the trust,
Yes.
which can be
100%.
done.
100%. And just why not? And again, that's a little extra work for the loan officer. It's a little extra time. I get it. But you've done so much more for your customer. And I think that they end up with a better package, a better solution. And that's our job at the end of the day. And I just think that also creates referrals. Customers are going to say, hey, Christine was great. She made sure we got an estate plan. So we got all done at the same time. People feel good about those things. They're going to talk about it more likely. They'll tell their attorney, they'll tell their accountant, their investment advisor. That's what you want.
Yeah, I think that's so, so important. All right. So if you had one message for every consumer watching and every loan officer watching, what would it be?
To every consumer, there is no substitute for preparation and planning in anything in life. I don't care what you're talking about. If you put a little bit of time ahead of time and prepare a little bit for what you know you need to do, you save. So there's a 10-to-1 ratio down the right road on certain things. And I think having a proper estate plan is one of them. I think you have equity in your house, protecting it through a reverse mortgage, whether it be pull the cash out, have a line of credit, talk to a professional. But that preparation and planning, for example, people near me in West LA had 2 $3 million houses paid free and clear. They didn't need insurance because The house wasn't worth more than lots. If it burned down, they didn't matter enough. And now they're waiting in line to get paid by insurance. If they had a line of credit through the equity line, they could write a check for some of that equity and either move or get started or whatever. So I would say preparation and planning to the consumer. I think to the loan officers, I would say that look for customer problems to solve. That's how we get paid. I think I was trained to avoid anything that didn't sound like listing a house. If they want to list a house, talk to them. If not, refer them to somebody else. That's a mistake. I think as an originator, don't just write loans. Solve people's problems. Loans is one of the most common tools in your toolbox. But if you have other tools in your toolbox as well, you're going to help more people. In the long run, helping more people will build your business more successfully.
That is huge. And working in this demographic, I think it's so important that we are advisors, not transactions. And,
Yes.
coming from the forward space, I see that much more commonly over there, but I do see it in reverse too, because
Yes.
loan officers are coming from the forward space with that same
Yes.
mentality of transaction, transaction, transaction. It's a
Yes.
relationship. We are,
Yes.
I say to my loan officers, we are farmers, not hunters.
Yes. Yeah, I think that's so true. And our training has not been that way. I think that's something that's changed over time. I also think that the hunters are the online services that we compete with. The Zillow, I look at the Zillow and the Redfins as the hunters. They don't care about anybody. They don't care about anything. They're just out to kill and to survive. And I'm the farmer who's out building relations with people. If I do my job, then they're going to look at Zillow and Redfin and say, yeah, that's interesting information, but Bill, I need Bill to take care of me. I think as a originator as well, yes, there's competing online services, but you want customers to say, but I need you to hold my hand through this because this is a very complicated transaction. It's an important transaction. It's a lot of money. And I want to make sure that I have the best advisor to help me. And you're the best person I know.
Absolutely. And then comprehensive. You get that comprehensive look. Do you have long-term care insurance? That's a big question I ask. Do you
Oof.
have your home in a trust? All of these things can be funded by the reverse mortgage, and people just don't have enough awareness. So
Yes.
people like you, people like me, thank you for bringing awareness to this space, because it is just such a foreign concept to so many people. Just the education to understand it is a lot, but there's so much more. If we can create a holistic plan, it will serve them for the rest of their life as well as their legacy.
Yeah, well said.
Well, is there anything else that you want our audience to know before we wrap up today?
No, I mean, if you're in this space as a professional, check out my podcast, probateweekly.com. We talk about probate and avoiding probate through estate planning. Or if you're a consumer, also I have the Reverse Mortgage podcast where I interview originators like Christina and coaches like Christina who are the best in the business to learn how to do this as well.
Awesome. Well, thank you so much, Bill. How do people get in contact with you? Just find the podcast, or is there something
Yeah.
else?
Yeah, go to probateweekly.com and you can sign up there and get notified when we have new episodes. You can scroll down and see me on audio or see past episodes on the YouTube channel.
Awesome. And if you are doing that, please subscribe. It helps us a lot. So thank you all for watching. Thank you so much for your time today, Bill.
My pleasure. It's a lot of fun, Christina. Thank you.
All right. Thank you. Thanks, everybody. See you next